Stock Market Bottom 2023, what to watch for. Primarily, I'm going to look today at what is the best opportunity to get into longs here, if you believe this is the bottom of the market, and I am looking for that right now. So we're going to look at the four major indexes, and the first one is the S&P 500. This is the benchmark by which fund managers are measured by. So the first thing we got down here, and let me bring up my little handy-dandy drawing tool, is we got the 200 SMA, simple moving average, and that's my plumb line, or in guy language, purple. So had a big move up today, catalyst news, but we've run right into the 15 EMA. So that's where we are now. Would not be surprised to see a little bit of maybe consolidation up here, but really the next major support level or resistance levels are here. The yellow line is the 100 SMA and the red line is the 50 SMA. We do have some good indicator action here and decent indicator action over here. By the way, I use a 3-day chart as my confirmation chart. I noticed that. So this is a 1 day on the right and a 3-day on the left. I do not use 1 day and weekly. Weekly is not good for confirming on a fractal basis, usually multiple time frames, against a daily chart. So you want to use a 1-to-3 ratio for sure. What I'm going to tell you is how I at least evaluate, and I'd be very interested in your comments below to see what you think about this as well, but how I evaluate which markets I want to get into. So it's a relative strength issue, and the S&P is pretty good. So the major factors are that we are providing 200 SMA as support. I will tell you I'm a little skeptical about one thing here. I would have preferred that the S&P broke a little below the 200 SMA. Then I'd have more confidence in the trade. I like those types of trades better. I don't like it when it doesn't quite get to the support. I mean, it's close enough for government work, depending on the country you live in, which is pretty much any country. But from a technical and analysis point of view, it's not the best. It's not the best, not the highest probability situation for this. So if we go back down and break these lows, I'll actually be more excited about that for taking a long trade. Of course, other things we'll have to set up as well. All right, so enough of that. Let's look at the relative strength of some other markets now. Four major indexes is what we're looking at today. The next one is the NASDAQ 100, so the QQQs. Now, if I change the scaling here, you can see that the Qs did not get down to the 200 SMA. So, again, from a relative strength point of view, this is stronger. It has not retraced as much in the overall bullish market. So, on the bearish retrace hasn't retraced as deeply, and that is a more bullish sign. So, between these two, I'm more bullish on the Qs, on the NASDAQ 100. All right, so now, of course, again, we're running right into resistance here, but the main issue as far as relative strength and which of these I would rather take long positions in, it would be the NASDAQ 100. By the way, this is not advice for what you should do. I would give you my personal analysis. Now we come to the Dow, and the Dow is a whole different ballgame. We've broken below the 200 SMA. There's your 200 SMA. And so we've gone below it, so more bearish. So on the retrace from the highs to the low, we come way down. More bearish action on this move down. From a relative strength point of view, I'm not as interested in buying this. Now, again, the other thing I don't really like too much, I'm not crazy about, is we do have a support level, and it's this blue line right here. But again, god dang it, we did not quite touch it. And again, my preferred way of buying is when we pierce below it. Markets are not exact, and you can't expect them to go to the penny, the pip, the penny, or the pixel on your monitor for support resistance. That's unrealistic. So we're in the zone, but again, not the highest probability for buying off support with this type of action. Okay, let's go to the final one, and that would be the small caps, IWM. And again, very, very bearish. So this is more in line with the structure. And by the way, what we're talking about today, when I'm talking about relative strength, is price structure relative to moving averages. As we had with the Dow, we have come down to below the 200 SMA. And then we've got, again, horizontal support. By the way, these support levels are from major previous lows in the past in history. And this is what I like better. That's what I was referring to before, where we come to the level and then we pierce below it a bit. Okay, I like that better. I'd rather buy that type of action. However, the problem is it is such a relative strength, a bearish market, that it's not the best one. Now, that's one way, and that's the first way that I measure relative strength between the 4 major equity indexes to determine which one of those indexes I want to take a trade in. Because I want the one that's going to perform the best, that's going to follow through the most, give me the most reward, the most money, honey, the most dinero, Romero, the most cash, Nash. Anyway, enough of that. So now there's another way that I do it too. And the second way I rely on even more. So that's going to take another full video. So I'm going to do part 2 to this series about market bottoms. And it'll be coming out in 24 to 48 hours. So real quick, subscribe to the channel, click the notification so that when that video comes out, you are notified. And I'll show you the special kind of chart that I use to help me determine which of the markets I'm going to trade. And, oh, by the way, I also got my cycle indicator. I give this indicator out to every one of my viewers, 100% free. My gift to you for being grateful that you watch my videos. Really appreciate it. And just go to indicatorwebinar.com. There's a tutorial there. By the way, for full disclosure, it is a common indicator that I modify. So it's nothing you have to download, which is good because that means you don't have to wrestle with technology. And, well, you can use it on pretty much any charting platform, because the indicator's already there, but we modify it. And the secret sauce is how to trade it. There's a little pattern in the indicator that I use for every single one of my entries. In fact, it's so good, I wouldn't even enter a trade without this indicator in this particular pattern. And it's the best thing I've ever come up with, and I just give it to you for free. So go to indicatorwebinar.com, get it, and make sure you subscribe so you get part 2 of this video.